Bitcoin's historically traded at 2.5 times its mining cost, so it's not out of the question that it could be over 20,000 by the end of the year.
Now, Bitcoin would still have to rally over 200% to reach 20,000, but the $20,000 comment was interpreted by some as a sign of bearishness. Now, we may remember, even as Bitcoin has plunged, Tom Lee has stood by his 25,000 year-end price target for Bitcoin. Tom, though, is back to say reports of his bearishness have been greatly exaggerated. Tom, thanks for coming back. It did take me aback. I was there on Squawk Box with you this morning, and it did take me aback when you said over 20,000 instead of saying 25K. So do you stand by 25K?
Well, I do think it's the first time I've ever heard someone thinking something could triple is a bearish comment.
Yes.
Right. I may have misspoken a little bit. I think what I was trying to illustrate was that given where mining cost will be and applying the historical average of 2.5 times mining cost, that would imply a fair value over 20,000, roughly 22,000. So I don't, we still think Bitcoin can reach 25,000 by the end of the year or something like that. But it's still a huge move from where it is now.
So you're not bearish, and I get how that's completely exaggerated, taken out of context, but it doesn't sound like you're as bullish. We've had Rob Slimer on from your shop as well, and at the charts, he would put Bitcoin up. He would come over. I would ask him, so, is 25K possible? And he said, it's going to be hard. But yeah.
By 25,000 still possible is one. I mean, Bob has pointed out, Bitcoin moved, from 7,000 to 10,000 in a couple weeks. But
so this guy is the chief financial officer of Fundstrat.
Over any 6-month period, 35% of the time, it's more than tripled. So in other words, it's, in any typical period, Bitcoin could triple, 1 and 3 times. So
And it's not out of the possibility. I mean, if we look at last year, October, this time, July, when was Bitcoin was at 2. So for it to go back to 20,000, yeah, you're looking at 2 to 3x gain. But back in July of last year, we're looking at, 5x, 6x for it to get back there. So that's not under the realm of possibility. Absolutely. Yes, it's been a very bearish market. I'll let him finish what he's talking about, but I just wanted to show you this. So one of the main indicators I look for to see if we're going into a bearish market is the exponential moving averages. I like to use the 20, the 50, the 100, and the 200. And usually they've got to be in a stair step. So like here's the 200, here's the 100, here's the 50, and here's the 20. So in a bear market, it usually looks like this. We're not completely all below even the 20-day, but it typically is stacked up like this. So where there's going to be a rebound, there's going to be a little pop, and then it's going to fall back down again. So let's look back here. So when it was real bullish, we're looking back in December, you can see that this is reversed. Here's the 200-day, here's the 100, here's the 50, here's the 20. You can see we're popping, once we hit one, a different moving average pops back up, hits it, pops, so then it started kind of going out where we're at right now. So this makes me a little nervous, but I like how we've got a little bit of a bounce. It's staying diagonal as opposed to going below here, which is telling me, there's potential that this is going to bounce right again. But I can get more into some technical stuff, but let's just get back into what this guy is saying.
I think it's not out of the question that Bitcoin can make a big move from here. And I would just point out what makes it unusual today is that Bitcoin's trading below mining cost. And 6 months forward, now this is only, of course, roughly 10 years of history, Bitcoin's had a positive return in nearly 100% of instances whenever it's traded below mining cost. So I think the risk reward is still very asymmetrically positive for Bitcoin.
This rally's got to start soon, though. I mean, you say 6 months out. We're 6 months into the year, so we have 6 months left.
Yes. The challenge is, of course, Bitcoin's quite volatile, and it's only got a 10-year history, but it is, in the entire history, it's always been a good time to buy below mining cost.
So I don't understand why mining cost is necessarily a floor. I mean, we've seen in other things, the cost of mining gold, for example, things trade below that. Why is it necessarily something like replacement cost? Why is mining cost necessarily a floor?
Well, mining represents, so let's imagine Bitcoin's a commodity, so mining represents the flow, right, because it's the block reward. And so in any commodity where you're looking at flow, incremental cost does actually explain or govern the price. So, for instance, the all-in sustaining cost of gold is actually a tachometer or a speedometer that really gold trades around. Gold stocks have historically traded pretty tightly in a band of price to book. So Bitcoin isn't a great buy when it trades one standard deviation above its 2.5 times, which is like over 3, like 3.5. And it's always actually a good buy when it's trading below 1 times. And it's unusual to trade below 1 times.
Okay, so you're still bullish, clearly.
Yes, I am jet lagged too. So
All right, but while you're here, we want to get your opinion on some other coins. So we thought we'd play a little Would You Rather.
Would You Rather with Tom Lee.
Crypto style. So I'll give you 2 cryptocurrencies. Tom, you tell me which one looks like the better of the 2 for the rest of this year. First
And he's
pairing-
jet lagged too, Mel. So
I know. So
slowly,
we'll be
be
gentle.
nice to the man. Come on.
Bitcoin versus Ethereum. Would you rather?
Bitcoin.
Bitcoin.
Yes. And it's because, I think that the investment case for Bitcoin's a little easier because it's a store of value. It's got a long history. Ethereum has some competition. We still like it, but it has competition.
Bitcoin versus Litecoin.
We'll take Bitcoin again. Now, no offense to Charlie, our
Charlie
cousin,
Lee,
Charlie
yeah.
Lee, yeah. But I'd rather own Bitcoin over Litecoin.
Okay. And we're going to end this with Ripple versus Bitcoin Cash.
I'd pick Bitcoin Cash over Ripple because, I think in some ways Bitcoin Cash has some unique features relative to Bitcoin, so there's some merits to owning it.
I want to do a bonus round with you.
Oh,
Okay.
Wow.
Bitcoin or U.S. equities here to the end of the year?
Between now and year end, we think the S&P can do mid to high single-digit gains, right? That would get to our roughly 3,000. And I think Bitcoin can easily do well beyond that between now and year end. So I'd rather own Bitcoin. But of course, it is riskier, so it's
Right.
different than owning an equity.
Okay. Tom, thank you.